Welcome back to Investing Talk podcast. Today we're taking a closer look at ARB IoT Group, a company operating in, well, the pretty exciting spaces of the Internet of Things and AI solutions. You shared some information on them, and our aim today is really to get to the heart of what you need to know right now.
That sounds good. We've got material here on their business model, how the stock's been doing, their financial state, potential pitfalls and upsides.
Market sentiment too, I think.
Market sentiment, competition, future outlook, absolutely. And we'll definitely touch on some very recent news, including a pretty substantial new contract they've landed.
Great. So consider this your specific briefing on ARB IoT Group, cutting through some of the noise to give you the key takeaways. So maybe let's kick things off just understanding what ARB IoT Group actually does.
Fundamentally, they provide complete IoT solutions end-to-end.
End-to-end, meaning?
Meaning from the initial idea, the design, all the way through to actually deploying it and making it work. They're in the tech sector, naturally focusing on software and IT services.
And applying this where?
Their focus is integrating IoT across different industries. Think smart agriculture, which seems to be a big one for them, smart homes, even areas like construction.
So not just selling sensors, but the whole system.
Pretty much.
Yeah.
Imagine a farm scenario. They design the system to collect soil data via sensors, push it to the cloud, run AI analysis on it, and then, provide actionable insights back to the farmer about irrigation. That kind of complete package.
Okay, I see. And their specific offerings, what are they actually selling?
It seems to break down into a few key areas. Developing those full IoT systems we talked about, specific smart agriculture solutions, distributing various IoT devices or gadgets, and interestingly, also providing AI server solutions.
Ah, the AI server part. That links the data collection to the processing power then.
It seems that way. It connects the dots between the IoT data gathering and the AI needed to make sense of it all. A pretty holistic approach.
Now, you mentioned stock performance earlier. Sounds like there's been some recent activity.
Yes, quite a bit. In the month leading up to early March 2025, the stock jumped significantly, something like 25%.
That's quite a rise in a short time.
It is, but it hasn't been a smooth ride upwards overall.
Oh, what was happening before that?
If you look back over the, say, 6 months prior to that jump, the stock was pretty volatile, lots of ups and downs. It seems there was a decline, and this recent rise might be more of a recovery, or at least the start of one.
And the longer view, over the past year.
Well, that's where the picture gets a bit more challenging. Over the last 12 months, the stock is actually down quite considerably, around 59% or so.
Wow. Okay. So recent strengths, but longer-term weakness.
That sums it up. Suggests maybe some broader market issues or company-specific problems were weighing on it before this recent news possibly boosted things.
Right, which brings us neatly to their financial health. Stocks are one thing, but what about the underlying business numbers?
Looking at the past 12 months, the revenue figure reported is around $100.6 million.
Okay.
And the net income reported was $16.7 million for that same period.
On the surface, those sound okay.
They might seem reasonable at first glance, yes, but there's a really critical piece of context here.
Which is?
Recent financial reports show a very, very sharp decline in revenue. Comparing the most recent year to the one before it, revenue dropped by about 76%.
76%, that's huge.
It's incredibly significant. Think about it. If a business made $100 last year and only $24 this year, that's the kind of scale we're talking about. It definitely warrants close attention.
Absolutely. That kind of drop would make anyone pause. Does that reflect in how the market values their sales, like the price-to-sales ratio?
It seems to. Their price-to-sales ratio is apparently lower than many of their industry peers.
Which could mean?
Well, a lower PS ratio can sometimes signal that a stock is undervalued. Or it could mean investors are cautious, maybe worried about future sales growth or profitability, given that recent revenue plunge.
Okay, so let's try and balance this. Potential red flags and then maybe some of the strengths. The big revenue decline and the stock volatility are clearly on the caution list.
Definitely the main ones to flag. That lower PS ratio, as we said, might also reflect market hesitation.
But on the plus side?
On the plus side, having a diverse range of IoT solutions is good. They're not reliant on just one niche.
And you mentioned new contracts.
Yes, that's a key potential strength right now. They secured a $53 million agreement for AI services in Malaysia. That's a substantial win and points towards capability in a really high-growth area.
Interesting. Any other strengths?
Their focus on Southeast Asian markets could be strategic. It's a growing region, and tailoring solutions there might give them an edge. Also, offering cost-effective AI solutions could be a competitive advantage, especially against potentially more expensive offerings from larger players.
Right. So how does all this translate into market sentiment? It sounds quite mixed.
I think mixed is the perfect word. That recent stock surge points to some renewed optimism, probably fueled by those contract announcements we just discussed.
But the history looms large.
But the longer-term stock performance, and critically, that massive revenue drop, creates skepticism or at least caution among investors. So you've got these conflicting signals.
And are analysts weighing in? Any clear consensus?
The information we have doesn't show readily available formal analyst ratings, but the stock's volatility itself kind of tells a story, doesn't it?
How so?
It suggests investors hold quite different views. Some are clearly betting on a turnaround of the bulls, while others remain wary of the bears. The price swings reflect that tug of war.
Okay. And what about their competition? You mentioned Siemens and Honeywell earlier.
They're definitely playing in a crowded field. Those big names like Siemens and Honeywell are established giants with vast resources and global reach.
So how does a company like ARB IoT Group compete?
It seems their strategy isn't to go head-to-head everywhere. Their competitive advantages appear to be that regional focus in Southeast Asia, and perhaps that ability to offer cost-effective AI solutions. It's more about finding specific niches and leveraging agility.
So maybe less about scale, more about specialization and regional expertise.
That seems plausible. The challenge for them, of course, will be scaling up eventually and potentially expanding their reach if they want to compete more broadly with the industry leaders.
Makes sense. Looking forward then, what should we be watching for? What could move the needle for them?
Future earnings reports are going to be absolutely crucial. Everyone would be looking to see if those big contract wins start showing up in the revenue figures. Can they reverse that steep decline? That's the key question.
So execution on these new deals is paramount.
Absolutely. The success of that $53 million AI services deal, in particular, will be a major indicator for their future trajectory.
And on the flip side, potential risks. What hurdles might they face?
Well, regulatory changes in tech are always a background risk for any company in this sector.
Sure.
The intense competition isn't going away either. And as we've stressed, that need to demonstrably turn around the revenue trend is probably their single biggest challenge right now.
Okay, let's focus a bit more on those really recent developments because they seem quite important. That $53 million AI server contract with Wizzle Group in Malaysia. Tell us more about that.
This seems quite significant. They're supplying their ARB 222 AI servers specifically for AI data center solutions. It really underscores their capability in AI infrastructure, not just the softer IoT side of things.
So hardware expertise as well.
Exactly. It suggests they can play in that complex, high-value part of the market.
And there was also news about their smart palm farming system.
Yes, another order secured for that system. The projection is that this will add about $13 million to their yearly recurring revenue.
Recurring revenue is always good.
Very good. It provides stability, and it also shows continued traction in that smart agriculture vertical, specifically in Sabah, Malaysia, it seems.
And they're even getting into AI drones.
That's right. Introducing AI-powered drone tech for plantation management. It definitely showcases innovation and applying AI in practical, potentially high-impact ways.
So, taken together, how do you think these recent wins are impacting the perception of ARB IoT Group?
Well, the immediate impact is likely positive for investor sentiment. It provides tangible evidence of new business and growth potential.
Especially the AI server deal.
Especially that one, yes. It positions them squarely in the AI infrastructure build-out, which is a massive global trend. The farming order reinforces their IoT niche strength. It builds a narrative of momentum.
But the underlying question remains.
The underlying question remains whether this momentum can overcome the previous financial performance and become a sustained trend. That's the tension.
Let's widen the lens again to the industry. You mentioned the growing demand for AI infrastructure globally.
It's a huge tailwind. Businesses everywhere are trying to leverage AI, and that requires serious computing power and infrastructure, the kind of servers ARB IoT Group is now supplying.
So they're potentially in the right place at the right time with that offering.
Potentially, yes. Their focus on AI server solutions definitely aligns with where the market is heading. Competition, as we know, is fierce, but maybe their integration capability linking the IoT data source with the AI processing offers a unique selling point.
Okay, so let's revisit the risks and opportunities one last time, factoring in this new information. Are those earlier risks, like regulation and competition, still valid?
Oh, absolutely. Regulatory shifts in tech can happen quickly, and the competitive pressure from both large players and potentially new entrants is constant. Those haven't disappeared.
But the opportunities seem amplified now.
I'd say so.
Huh.
The growing demand for smart farming creates a clear path for expansion for their IoT systems. And these significant contract wins could act as proof points, potentially opening doors to more strategic partnerships or larger deals down the line. Success breeds success, sometimes.
So wrapping this all up, it really is a picture of a company well, an interesting point.
Definitely dynamic. You've got these recent, quite impressive contract wins that AI server deal stands out, plus ongoing traction in smart farming. That certainly suggests potential for a rebound after a very tough financial year previously.
But you can't ignore that huge revenue drop from before.
We absolutely cannot. It hangs over the story. The critical question now becomes, are these new developments the start of a genuine, sustainable turnaround, or just a temporary bright spot? Can they consistently grow revenue again?
And that really is the core issue, isn't it? This stark contrast between the positive momentum from recent news and that concerning longer-term financial backdrop. For anyone listening, it forces you to ask, how much weight do you put on these new wins versus the past struggles?
It's clear they're operating in sectors IoT, AI infrastructure with significant long-term growth potential. That's undeniable. But like any potential investment, ARB IoT Group comes with its own specific mix of risks and potential rewards that need careful consideration. We hope this overview, based on the info you shared, provides a clearer picture.
For further investigation, looking into detailed competitor analysis might be useful. And of course, keeping a very close eye on their next few earnings reports will be key to see if that financial recovery is actually materializing.
Thank you for letting us explore this company with you today.
And for everyone listening, if you found this analysis useful, please do subscribe, like, and maybe leave us a comment. It really helps us create more of these tailored discussions for you.